The Capital Markets Authority is charged with the prime responsibility of regulating and facilitating the development of orderly, fair and efficient capital markets in Kenya. It is a state corporation established under an Act of Parliament.
The Capital Markets Authority looks at the development of all aspects of the capital markets. It looks at the support of investor protection, which is very critical, supporting the growth and expansion of the securities markets in the country to ensure that securities exchanges are available to the widest spectrum of investors possible. We are charged with ensuring that the capital markets in Kenya will operate as much as possible in an orderly, efficient and effective manner to really facilitate the mobilization of capital and to support a savings culture in the country. We also look at issues of ensuring that an adequate framework for investor protection and investor compensation is available to ensure that in the event of any challenges in the market that arise in line with the statute, we'll be able to provide an appropriate level of compensation to the investors in our market.
The Capital Markets Authority plays an important role in the country's development by facilitating businesses wishing to raise capital for long-term development, as well as allocation of resources to finance long-term investments such as infrastructural projects, including roads, housing and power generation projects. The Capital Markets Authority approves applications for initial public offers, rights issues and bonds, while also facilitating the introduction of new products and services.
When we look at the responsibilities of the Capital Markets Authority with respect to the issuance of capital markets products, we approve issuances of equities. That can be through an initial public offer when a company comes to the exchange for the first time and seeks to raise capital. It can be through a rights issue where an existing company seeks to tap its existing shareholders and other members of the public to raise additional finance. It may be through additional issuance of securities where a company sees the opportunity to raise further funds by issuing further shares through the market. And that may also involve corporate actions such as bonus issues to allow a company to allot additional shares to its shareholders as opposed to issuing a dividend in order to allow them to take a larger stake in the company and enjoy the continued profit of that company.
A rights issue is an offer to existing shareholders of a company to buy new shares, usually in proportion to the number of shares that they hold at a discounted price. Rights issues are used to raise funds to support business growth and expansion plans. Bonds are long-term fixed interest securities issued by the government and corporate entities. The bond issuer makes an obligation to pay interest at specified times and intervals and to pay back the principal at maturity of the bond.
We have seen over the last 10 to 15 years, the government of Kenya has raised in excess of 1 trillion shillings through the debt market. And we have also seen an increased level of corporate debt issuance by companies, especially infrastructure companies such as the Kenya Electricity Generation Company and Safaricom Limited in the telecommunications sector, who have been very strong tappers of the capital markets through debt to fund their further infrastructure rollout and development.
Among the regional bodies that the Capital Markets Authority has facilitated in issuance of bonds, the East African Development Bank has issued corporate bonds to support regional development, while Shelter Afrique has issued corporate bonds to support housing development.
Now, a real estate investment trust is a collective investment product which allows investors to buy 1 unit, 10 units, 100 units in a larger pool, which pool will then ultimately be invested in either income-generating property or, in the alternative, will be invested in development or construction activities for real estate.
To qualify as a REIT, a trust must have most of its assets and income tied to real estate investment.
Kenya's approach to real estate investment trust is quite unique globally. The traditional real estate product that has existed all around the world is an income REIT, where you are investing in income-generating properties such as a mall or a range of office blocks or even a very large housing complex. But looking at the key targets we have under the Vision 2030, the authority was very mindful of ensuring that we also develop a product that will cater for the creation and development of real estate, because we do not as yet have a sufficient pool of available real estate for income REITs. And that is how we came up with the structure and procedures relating to development or construction REITs. With a construction development REIT, the product is designed to be targeted to institutional or higher net worth individuals who will be able to take the much higher risk involved in construction and development. And when this product is put on offer, it will be subject to key restrictions to make sure that it's only available to higher net worth persons. Now, to ensure that Wanjiku and other small investors are not blocked out of the opportunity to participate in development financing, we are also allowing investment groups and other groupings of persons who are able to raise the minimum investment of 5 million to also participate.
The Growth and Enterprise Market segment aims at facilitating the listing of small and medium-sized enterprises by providing them with an opportunity to raise capital to finance business growth and expansion.
Through this market segment, which is known as the Growth and Enterprise Market segment, or GEMS, we're also seeing it as a critical opportunity to allow a wider spectrum of investors to participate in some of our prime companies that have seen significant growth over the years, but have been locked into family structures. And we're hoping through this new segment, we'll be able to, one, strengthen the governance and transparency in these companies, as well as allow them to raise significantly more capital to be able to grow and develop their business model further, and allow a wider spectrum of Kenyans to be able to participate.
The Islamic financial services industry, comprising Islamic banking, Islamic insurance or takaful, and the Islamic capital market, is an area that has grown into a substantial segment of the global financial markets.
With the prime location of Kenya in close proximity to the Gulf, as well as recognizing the very strong and financially able Muslim community in the country, there are very significant opportunities for the growth of Islamic financing through the capital markets, and we're working very constructively with all the financial sector regulators to make sure that we're putting in place an appropriate framework to support Sharia-compliant investment across the board.
By helping companies raise funds in the capital markets, the Capital Markets Authority is playing its role in the attainment of the objectives of the Vision 2030. The authority is also playing a key role in transforming Kenya into the regional finance hub.
We have been tasked with engaging with the City of London to look at the modalities for leveraging off the strong experiences and background of the City of London, which is without question the largest international financial center in the world, to see what lessons we can learn and what learnings we can have and exchange of experiences we can have to build capacity within Kenya to also move us towards the establishment of an international financial center. The entity we're dealing with in London is known as the City UK. They provide a platform through which they, for one, do policy and advocacy and lobbying within London and within Europe as a whole to strengthen London as an international financial center. But in addition, because they appreciate the critical need for interlinkages and connections, they work with other entities and other jurisdictions in order to support the development of international financial centers elsewhere.
The primary objective of the Nairobi International Financial Center is to develop an efficient and globally competitive financial services sector that drives high levels of savings and investments required to finance the country's long-term investment needs and Vision 2030 flagship projects. The Capital Markets Authority, promoting capital markets integrity.